Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets. Today, we're unpacking some truly fascinating news from the tech world, from staggering company valuations to surprising executive pay packages, and even a peek into the shifting landscape of cybersecurity. We've been sifting through a stack of fresh sources, and our mission is really to cut through the noise, giving you the clearest, most relevant insights into what's happening in big tech right now. So as we dove into this material, what was the first thing that really grabbed your attention?
Well, what's fascinating here is just the sheer scale of the financial figures flying around. I mean, we're seeing valuations that almost challenge traditional logic, and it really shows the intense belief, maybe even a bit of frenzy around certain areas of innovation, especially AI. It's truly a defining moment for these model makers.
That's a great place to start. Yeah, the reports we looked at highlight some absolutely wild valuations. Can you give us the lowdown on companies like Anthropic, for instance? What kind of numbers are we actually talking about for them?
Absolutely. So Anthropic, a major AI startup, was valued at, $60 billion just a few months ago? But the latest data we're seeing indicates they're now looking at a valuation closer to $170 billion.
Wow.
Yeah, and potentially even up to $270 billion with new fundraising.
Goodness.
It's a tremendous leap in a very short time, and it's part of a broader trend we're seeing, really. OpenAI is valued over $240 billion. XAI is in talks for $200 billion. It just speaks to the incredible appetite for these foundational AI models right now.
An astonishing jump like that in such a brief period, it definitely warrants a closer look. What's fundamentally driving that kind of increase? And what do their financials look like to even begin to justify it?
Well, they are seeing significant revenue growth. Anthropic is apparently at about $5 billion in recurring revenue.
Okay, recurring revenue. So that's the sticky stuff, right?
Oh, yeah.
Subscriptions, long-term contracts.
Exactly, yeah. It shows strong customer commitment, which investors love, and they project reaching $9 billion by the end of the year.
Impressive growth.
It is. The challenge, however, is financing this explosive growth. They need something like $5 billion for their latest round.
$5 billion. Just for one round.
Yeah, which is a massive amount of capital.
And this is where it gets particularly interesting, according to the sources we read. We're hearing about some big-name investors, including sovereign wealth funds, stepping in despite some previous hesitations. What's the story there?
Indeed. One interested fund mentioned is the Qatar Investment Authority. And what's striking is that Anthropic had previously, quite publicly, stated they weren't interested in taking money from large Middle East sovereign wealth funds.
Right, citing national security concerns, I believe.
That was the reason given, yeah. But a recent internal memo from Dario Amodei, Anthropic's CEO, indicated a clear shift in their position.
Yeah, that memo had a pretty direct quote, didn't it? Something like, "Unfortunately, I think no bad person should ever benefit from our success is a pretty difficult principle to run a business on."
That's quite a statement to make to your staff.
It really is. So what does that change of heart signal about the sort of practicalities of business in this current climate?
Well, it raises a really important question about the practicalities of business in this hyper-competitive AI landscape. To expand their infrastructure, develop new models, compete effectively, these companies need massive capital infusions, just enormous amounts.
And traditional VCs aren't writing those kinds of checks.
Not usually, no. Silicon Valley VCs aren't typically investing $1 billion in a single round, unless maybe you're an iconic firm or perhaps managing wealth for titans like Mark Zuckerberg or Jack Dorsey. The reality, as pointed out in the sources, is there might just not be a path forward for Anthropic to achieve the scale they need without raising money from some of these Middle East funds.
So a pragmatic decision driven by necessity.
It looks like it. And this isn't just about Anthropic needing cash. It kind of reflects a growing tension across the industry, doesn't it? How do you balance fast growth and intense competition with maybe deeply held ethical principles, especially when global capital might be the only option for getting to the necessary scale?
It forces a reevaluation of what ethical really means in practice when you're faced with, well, potentially existential business needs.
Fascinating. Okay, let's pivot then. From those dizzying heights of AI valuations to another really hot area, cybersecurity. We've seen some significant M&A news there. Palo Alto Networks just acquired CyberArk for $25 billion. What's the strategic thinking behind such a huge deal? especially maybe connecting it back to the AI revolution we were just discussing.
Yeah, I think if we connect this to the bigger picture, it's almost certainly a direct response to that AI revolution, the rapid adoption of AI, especially the proliferation of AI agents, things that behave like humans and machines. It's creating this massive new attack surface for cyber
A
threats.
bigger playground for the bad actors.
Exactly. And the analysis in our source material states that something like 90% of attacks propagate through identity.
90%. Wow. So, acquiring a leader in identity security like CyberArk became, well, almost imperative for Palo Alto Networks to secure their customers in this new landscape, especially as AI makes it easier for attackers to operate quickly and, importantly, at scale.
Right, it's about securing those entry points in an increasingly automated world. Makes sense.
Precisely.
But the material we reviewed also presented a contrasting view, didn't it? From Shlomo Kramer, the CEO of Cato Networks. He seems to have a different take on this whole platformization trend among cybersecurity companies. What's his perspective?
He does. He views much of this platformization as, I think his phrase was, a bridge too far. Basically a promise that won't fully materialize and one that often fails for these pure-play security companies.
Interesting. Why does he think it fails?
He believes only Microsoft has truly pulled off a successful platform play because they own the underlying operating system. Customers, he argues, actually prefer to choose individual best-of-breed platforms for network, endpoint, identity, cloud security, rather than one vendor trying, maybe imperfectly, to do it all.
So a strong philosophical difference in how you approach the market.
A very strong difference, yeah.
Okay, so if that's his view, what is Cato Networks focusing on then? If not this broad platform strategy, and how are they doing?
Well, Cato is laser-focused on network security and SaaS Secure Access Service Edge.
SaaS, right. Can you just briefly explain what that is again?
Sure. Think of SaaS as basically combining all your key network security functions, things like firewalls, secure web gateways, VPN replacement into a single cloud-native service. It really streamlines how companies secure their remote workers and their cloud applications, moving away from that old fragmented security approach with lots of different boxes.
Got it. Cloud-native network security.
Exactly. And they're seeing significant growth, apparently 46% year over year. They see themselves at the beginning of a huge systemic market remaking. The network security market is estimated at $100 billion.
Wow.
And current projections suggest 60% of enterprises are expected to start migrating to SASE in the next 3 years, with maybe 80–90% eventually transforming from appliance-based security to cloud-based SaaS.
So they feel they're riding a big wave.
They do. And Kramer also states they feel zero pressure from the hyperscalers. Google Cloud, Microsoft Azure, AWS, in the network security space specifically.
Interesting. That really reinforces his belief in their specialized approach, doesn't it?
It certainly does.
Okay, let's shift gears again. Let's look at how the tech giants themselves are navigating this whole AI surge. The materials we looked at dive into Meta's huge capital expenditures, essentially how much they're spending on long-term stuff like data centers, servers, AI chips, and then compare that with Microsoft's strategic AI bets. What are investors looking at with Meta, especially given their recent history, that year of efficiency?
Right. Meta's capital expenditure, CapEx, is at historically high proportions, potentially up to $72 billion this year.
$72 billion.
Yeah. And while this huge spending has driven revenue growth from their core advertising business, mainly by improving their ad tools with AI, investor patience will definitely be tested if a clearer monetization and productization story doesn't emerge beyond, say, the first couple of years.
It feels a bit like déjà vu, maybe, thinking back to the Reality Labs investments.
Reminds many analysts of exactly that, yeah.
Yeah.
Where the losses just mounted without clear revenue generation in sight for a long time. Meta's big push now into superintelligence labs is fundamentally about increasing user engagement to ultimately boost their advertising ceiling. But it's a massive long-term bet.
So, okay, if AI is supposed to justify this huge spending and unlock new revenue beyond ads, what kind of timeline are investors looking for? Is there a real risk, do you think, that Meta's AI investments could become another Reality Labs situation in terms of that long-term monetization puzzle?
That's really the core question for Meta right now. Investors are looking for a much clearer path for how this AI spending translates into new revenue streams, or at least significantly higher margins. And ideally, they want to see that path emerge within the next, say, 2–3 years. Otherwise, yeah, the risk of the Reality Labs problem repeating itself is definitely there.
Okay, and how does Microsoft compare in this AI race? What's seen as their winning formula?
Well, Microsoft's winning formula has historically been cloud and Azure. That's been their engine. So investors are keenly watching the trajectory of Azure growth. They're looking for over 30% growth, something comparable to Google Cloud. But what's fascinating here, where Microsoft really distinguishes itself, is how they communicate specific AI contributions.
Ah, okay. How so?
They're actually breaking out numbers, aiming for a potential $40 billion contribution from AI to Azure and other products like Office by 2026.
40 billion attributed directly to AI.
Exactly. And that kind of specificity makes investors much more comfortable with the significant amounts they're also spending on AI infrastructure. It gives them a clearer ROI picture.
Makes sense. And then there's that intriguing relationship between Microsoft and OpenAI, often called a frenemy dynamic, right? What's the insight there, especially now that OpenAI seems to be expanding its own ambitions?
It's definitely a complex, evolving relationship, no doubt about that. While Microsoft's early partnership with OpenAI was incredibly shrewd, securing early access to cutting-edge AI, OpenAI is now moving quite aggressively into the enterprise software space itself.
Which could mean direct competition.
It could absolutely lead to direct competition with Microsoft on certain product lines down the road. And this isn't just about product overlap. It kind of reveals a fundamental strategic tension, doesn't it?
What do you mean?
Well, does Microsoft primarily want to be the infrastructure layer for AI, the Azure platform everyone builds on? Or does it want to own the applications built on top too? And conversely, does OpenAI want to remain essentially a pure research lab, supplying the models? Or does it aim to become a full-stack enterprise software player that could eventually challenge its own biggest investor?
That is a fascinating strategic dance.
It really is. And it could redefine the future of enterprise software. For now, it's pretty uncertain how that technology transfer and distribution will ultimately be managed between them, though some sources suggest OpenAI might have the edge in terms of pure competitive instinct right now.
Interesting. And overall AI leadership, where do the giants rank?
In terms of overall AI competency and leadership among the big tech companies, the general view from the sources puts Microsoft at #1, with Meta actually coming in at #2.
Meta at #2, despite the monetization questions. Okay, speaking of big tech and big money, the reports we saw also touched on CEO compensation, specifically Figma's CEO and what's been called a moonshot pay package. What are the details of this deal? How do these mega packages actually work?
Right, so Figma's CEO has this new compensation deal that could potentially be worth up to $2 billion.
$2 billion.
Yeah, and potentially even $4 billion if the company's share price hits the top end of its target range, somewhere between $60 and $130 a share within the next 10 years.
Wow. How is a package like that structured?
It's typically split between performance targets, so the company has to hit certain milestones, and time vesting, meaning the CEO has to stay with the company for a set period to get the full amount. It's part of a broader theme we're seeing, trying to retain absolutely key talent for the long haul. But yeah, the scale is just massive.
Is this kind of moonshot package common? Or are these outliers? And how do investors generally react to such huge potential payouts? We've all seen the discussions around Elon Musk's package, for instance.
It's still relatively uncommon at this scale, I'd say. And it's hard to compare them directly because stock price volatility plays such a huge role. They don't always work out either.
Sure.
Like the Rivian founder had a similar package, but the stock performance just didn't hit those lofty targets needed for the big payout.
Right.
However, similar to the Elon Musk situation, if the share price does go up significantly, 3, 4, 5, even 10 times investors generally are inclined to be quite generous, they benefit hugely too.
So if the value creation is there, the payout is seen as justified.
Largely, yes. And remember, Figma's IPO was reportedly 40 times oversubscribed. That shows immense demand and investor confidence. So they seem to support this retention strategy. And apparently the CEO is also still collecting from a previous pay package awarded back in 2021, adding to his already substantial wealth.
Good grief. It's a stark reminder, isn't it? Even with economic uncertainty swirling for these truly high-growth tech companies, the rewards at the very top can be absolutely staggering.
Absolutely staggering.
Well, we've certainly covered a lot of ground today, from the dizzying heights of AI valuations and the pragmatic, sometimes difficult shifts companies are making for capital, to the strategic chess moves in cybersecurity as AI changes the threat landscape and the just eye-watering stakes of tech leadership compensation. So what does this all really mean for you, our listener, trying to stay informed in this incredibly rapidly evolving tech landscape?
I think this discussion really highlights that while the market often has these short-term reactions to daily news, Fed meetings, quarterly earnings reports, things like that, Long-term investors and industry watchers are really looking at much bigger pictures. They're focused on the fundamental trajectory of growth, how AI is truly integrating into core businesses or not, as the case may be, and the strategic positioning for these huge systemic market changes like SASE in cybersecurity. It's about understanding where the foundational shifts are happening, not just getting caught up in the daily fluctuations.
Yeah, that makes sense. And perhaps the biggest takeaway is just how dynamic everything is. Technology is constantly reshaping our world, creating new opportunities, new challenges, forcing companies and their leaders to make incredibly bold moves, sometimes even changing their minds on deeply held principles, as we saw with Anthropic, all really in the pursuit of growth and innovation. It's a fascinating, high-stakes game to watch. Thanks for tuning in to Bite-Sized Tech. If you enjoyed the episode, please like, comment, share, and subscribe for more fun tech discussions. We really appreciate you joining us for this look into the latest tech headlines. Until next time, stay curious and keep learning.